Hey everyone, this is Jonathan with REI Trader. Thanks so much for joining us. I have here Mr. Justin Franklin, who just completed a refinance on one of his rental properties in St. Louis, Missouri. Welcome, Justin.
Thank you. Glad to be here. Glad we finally got together.
Hey, let's start by telling our audience a little bit about your investing background.
I have a military background, so I leveraged VA loan to get my first property with zero down, and just kind of took some equity from there a couple of years later. And now I have a portfolio of 12 properties. Yeah, and I just added two more actually, which I'll probably be hitting you up for after this call. I live in California. I invest in, I have properties in Detroit, Michigan, the Pittsburgh area, and then St. Louis as well. I had a duplex in Dallas that I just recently sold. And then my original property in Colorado, I actually just sold that as well.
And you're employing the BRRRR model. I mean, you're buying these properties with hard money, I assume, with bridge loans, and you're doing the work necessary and then refinancing out into a 30-year fixed mortgage, correct?
Yeah, so I started out actually just financing everything. As soon as I found out you can buy like $50,000 properties, I financed a couple. And then I just started making good relationships with wholesalers and deal finders. And yeah, and then put some money back into it, put a renter in there, and then try to refinance it and do it all over again. Excuse me. But no, I work full time as well. I kind of do this on the side. I'm getting to the point where my cash flow is teetering of where I could be able to do it full time, but I still have a 9 to 5.
Hey, Justin, why don't you start by telling us a little bit about the property?
Yeah, absolutely. So it's in a small town in St. Louis called Berkeley, and I actually own two other properties there at the time. I had one property there. I bought the property, which is a 3-bed, 1-bath. I bought it for $28,000. And this was my first BRRRR deal actually, and I used my own cash. So I put about $18,000 into it, essentially like a full rehab. The guts were really, really good. But so I think I was all in at $36,000, and I was going into this process just expecting to get kind of just my money back, but took out about 50,000, which was the minimum. And then I think I went home with like 43. So came out a little bit on top. Got that money back, and I've since reinvested that. And yeah, I'll be coming back to you in about five or 6 months.
So I believe your interest rate was about 5.5% as you chose to just take the minimum amount out in order to recoup your investment. So you got a stellar property with a low paying mortgage and much higher cash flow than a typical investor.
Yeah, like we talked about earlier, my goal right now is cash flow. So I just wanted to take out the minimum, maximize that monthly return. I think when the first appraisal went out, two mistakes. I didn't have my property manager meet him there. He kind of was there by himself. The house was like 90% done. But there were still people working on it. So it just didn't show up well. And I think he also included like the surrounding distressed properties in his comps. So I remember it came back low, and you kind of advised me to have my property manager meet him out there, and he talked him through all the repairs that he did and things like that.
The tip here is that whenever you're going for a refi and you're getting that appraisal done, have someone meet the appraiser out at the property. Have your property manager provide them with comps, give them a scope of work so they can see all the repairs that were done to the property, and also a copy of the lease. And that goes a long way in getting the property appraised. In this case, your first appraisal, because no one met the appraiser out of the property, came in at $55,000, but the second appraisal, when you had your property manager in fact meet the appraiser at the property, came in at $89,000. Justin, was there any other challenges you had during trying to get this property refinanced?
Yeah, I think the price point in itself was a challenge. So I had read all the literature and listened to all the podcasts about the BRRRR method, buy it, rehab it, put a tenant in there, and then go to a bank and they'll refinance it. And I kind of just jumped full steam ahead. If I could go back, I would find that end lender first. I was calling around for about probably like 3 or 4 months to different lenders, local credit unions, until we connected on Facebook. But I would say I talked to about 30 different banks or credit unions that turned me down because the loan amount was too low. So yeah, if there's any other people investing in this asset class that are looking for a preferred lender, this is the spot.
I appreciate that. I know with the lower ARV properties, they're harder to get loans, especially with more of the traditional lenders. And that's why with us, it's more on the commercial lending side. We've been very successful at getting these lower ARVs refinanced. So final question, would you recommend REI Trader to your fellow investors?
Yeah, absolutely. I plan to use your services going forward as well. I think you did exactly what I would expect from a broker. Find the right product to match my situation, kind of just figuring it out and getting us to the finish line. But to answer your question, that was a long way of saying yes.
Thanks so much for joining us today. We've been talking with Justin Franklin, who just completed a refi on one of his rental properties in the St. Louis area. If you are seeking a bridge loan for your fix and flips or a refi for your single family rentals, your rental portfolio, or your multifamily portfolio, please reach out to me. We'd love to assist you on your next purchase or refi. And we hope to see you next at the closing table.